Hi folks, today I'll be talking about the simulation which I'm trying to show to my viewers, as the objective is during as and when you take uh, this service, it is expected that you run a simulation first. Once you do the simulation, you know exactly what changes to be made, and it's running, it's stable, it's giving you good results, and you're happy with the results. At that point, you switch over to a real money account. So this is this is a task which I would expect everyone to do it, because your appetite of risk and gain could be completely different from mine. And as a result, you can configure the algorithm based on whatever your preferences are. Say, for example, in our case, this is we are running a simulation with the conservative mindset, where we are talking about roughly $50,000 of investment, which is nothing but 3.15% of the cash we had as a net worth. So you can set this parameter up in the algorithm, and the algorithm will basically look into $50,000 roughly type of an investment. Say, for example, you have 50,000 and your net worth is 50,000. In that case, this cash utilization becomes 100%. So you're controlling that through a percentage variable here, which is roughly around 50,000. So having said that, let me show you which is the account. This is the particular account which we are looking at. 069 is the last three digits. So this is where we need to go and take a look at it. It is 069, and it seems like right now it hasn't traded anything. It's almost like 220, but it hasn't traded. And the question is why? And that's exactly what I'm trying to drive to. Is, if you notice in the configuration, we had made a condition that it will only get into the market when the market conditions, I'll just a minute, I'll try to get there. Yep, here it is. We made a change recently when the market condition, which is the S&P, it is supposed to look at the S&P, and if the S&P is over 1.75% on the bull side, then only it will qualify the stocks. It'll go to the next level and look into the list of stocks. But if it doesn't, it will not even qualify the market. And you are getting a confirmation. You will get the confirmation even from an email, because every 60 seconds it's looking into it. If you notice the timing, it is every 60 seconds. It is scanning the market. And we got the last email at 2:21, which is just now. So let's take a look at that and see why it is rejected. It seems like it has rejected because it is expecting the market to be over 1.75% on the long side, and on the short side, anyway, today it is not supposed to short, but on the short side, it is supposed to look qualify if it goes below -2%. So it seems like if we go here to Yahoo chart, we are in this range 1.40%. So at this point of time, at this hour, we are at 0.22%. I mean 1.4%. We not reach 1.75%, and as a result, it did not qualify. So this will, you can change it if you want. If you want to be aggressive, you can change this number to say 1%. It's up to you. If you're willing to take the risk of being a little bit moderate instead of being a conservative investor, you can change that to 1%. Nobody will stop you from doing that, but there is always a counter effect for that, which I explained on previous videos. So in my case, I will not trade anything in between if it is below 1.75%. Why? I had it at 1.5. I had it before at 1.5, but if you notice that in spite of having 1.5 on I had a loss here. On which day? I think it was on the May 5th. I had faced a loss. So what I did is, as I said that in algorithm, and I've explained in my previous videos also, all you need to do is, if you make profit, great. If you face a loss, you analyze the situation and you make the changes. Say for example here, after this particular day, I've realized that okay, instead of 10 minutes, I'll be looking into 15-minute bars. So that means it is looking into 15 minutes of last two bars with a higher high. That's what it is looking at. So that means on the first condition, it has to be over 0.75%, which is not. At this point, we are at around 1.33% on S&P, so definitely it's not going to trade. And assuming even if it is at 0.76%, 1.76%, it will be looking into the last two bars of 15 minutes. That's exactly what it's looking at. It will be looking at last two bars of 15 minutes, even if it is over 0.75%. And if it is a higher high, then only under that condition it will qualify the market. Otherwise, it will disqualify the market condition and it'll throw out for as to what you are seeing here. You see again we got few more new reports. So you can see that it rejected, the index failed. Previous close is 284.25, the current is 288, change of 1.44%. It is supposed to be over 1.75% and hence the rejection. So it got rejected on the very first step. If this would have qualified, then it would have gone to the next step, which is to see that if the last 15 minutes bar, of course we are saying a yes with last 15 minutes bar is a higher high. So if the last 15 minutes bar is not higher high, even if it is over 1.75%, it will reject it. So this is one of the scenarios, and it is looking into every 60 seconds. As you can notice that this is looking into the scanning is going on. If I open this up for a while, you'll notice that it will be scanning every 60 seconds for us. So what it means is basically it is checking into the market conditions. It is looking into the last 15 minutes bar to make sure whether it is qualifying it or not. So having said that, I don't think humans can do it. Uh, but at the same time, in quantitative trading, if you face a loss, if you face a loss the way I did to show it to you, which was here, I had faced a loss of $366 on May 5th. I have tightened the algorithm from 10 minutes to 15 minutes on a two bars, and I've moved the S&P from 1.5 to 1.75 to qualify. On the short side, I did not make any change. And on the moving average for the tolerance, I have increased it from 0.06 to zero point 0.2 to check every stocks if the moving average is the differential of 2%. So as I said, lessons learned. So when you learn a lesson, you don't have to panic. All you have to do is make sure that you tighten the algorithm. And if you are making substantial profits, see at this point we are going at a rate of in between 20 to 106% if we take out the average. But if you notice the changes which happened for that particular day where we lost $366, you can take a look here and you can also look into the report which is published by the broker. So this is the report which we are looking at, and this is the anyway mark to market. Everything will be nothing will be left for the entire day because everything is going to get wiped out at around 3:45. So the realized profit which I'm talking about here is basically minus 366. That's what I'm telling you. Now, why it happened, how it happened, you need to look into the market as to where you had faced a loss, under what conditions, if you would have increased the parameters of moving average with the tolerance, you could have avoided this. So that type of research you need to do to strengthen the algorithm. That's all you need to do. So in this case, if you notice that I lost $51 from GM under both conditions, it traded in at 10:09, at 10:11 it came out with a loss, and then again it went in at 11:06. It saw something at 11:15. It came out with a loss. So maybe if I would have increased the tolerance percentage here, which is this one, on this section, if I would have looked into the 5 minute, if I would have looked into the 5 minute of 10 and 2, which is the fast and slow moving average with a differential of probably 2, I would have probably saved myself from the scenario of the money which I lost in GE. And I could have also strengthened my uh, uh, initial entry point for the market, which I'm looking at over 1.5%. So I have increased that. I've increased the candle qualification criteria. I'm looking at 15 minutes instead of 2 minutes for a higher high. I've increased the market conditions S&P to be over 1.75%. Previously it was 1.5%. And at the same time, I have increased the expectation of the of the stock from a 5 minute, of course, from a 5 minute level from a zero point 0.6 level to I mean zero point 0.6 level here to zero point 0.2 level after I lost $366. So I have made myself much more stronger and more conservative so that next time I don't lose money. So having said that, it seems like although today being a positive day, but the market is still not over 1.75, it is disqualifying all the trades. And this is what we are seeing here as why it has disqualified. I have another account to show, but it has got nothing to do with intraday. Here we are talking about passive income with intraday because with the scenario which we are in today with coronavirus and so much of uncertainty going on, it is not a good idea to have a long-term investment. But I will show you also this is a simulation which is going on, but also there is another real account which is being used for trading, and let's see how it is doing. Seems like these are real account, and it seems like we made some money out of $6,000 investment which we are doing. 6 or 10, either or. We have to see. I have to see the trade log where we made around $3,400. That's good. This is a strategy which is long term. It has got nothing to do with intraday, but it's a real money account. So this algorithm has been used for quite some time, and it runs exactly the way you configure it. So today, the conditions which I have just mentioned, it is not qualifying anything at this point of time because the configurations are very rigid. So it is up to you if you want to reduce this to probably this 0.75 1.75 which I just showed you here. If you qualify the market at say 1%, yes, there is a downside of it. You might be taking little risk, but if you want to remain conservative as the way I am, and I don't mind. I mean, if I am not trading so far out of 8 days, I think I haven't traded 5 days I haven't traded, but I traded 3 days and I'm already in that range of 20 to 106% on an average. This is just an average. So even if you can maintain your passive income, uh, or even if you're an intraday trader and you can maintain around 35 to 50% range of ROI, I think it is very significant. But I'm just trying to teach my members who would be interested in quant trading. There's nothing you need to do. Everything is once you set it up, the way you keep a track of what changes you are doing. And of course, my guidance will always be there. And your goal here is to improve this to average range. So if you face a loss, which might happen, you just have to tighten it. You just have to tighten the algorithm and wait so that lessons learned, like something like that. But if the market is going bull and bull and bull non-stop, then probably I would say, uh, if you take this case, which I'm saying, 1.75%, maybe I would have kept it at 1.5% and strengthened here a little bit. But the market is volatile. Especially after the coronavirus, one day it is bull, the next day it's bear, again it's bull, and so forth. So you're better off to make one adjustment here and make the S&P criteria to qualify, or whichever index you follow to qualify, to be a little bit more rigid. So the most important thing is this, and the second important thing is you don't want to lose out on opportunities. Say for example, in this previous account, I've said that TWLO, it made $3,400, which you're seeing. If there could be a possibility that if you would have been pulling probably at less than 60 seconds, here we are pulling at every 60 seconds for all the accounts, you could do your pulling for after every 5 minutes. You could have lost that opportunity. So it is good to have a very short pulling interval. Of course, as I said, humans cannot keep looking into all of this every 60 seconds. It is impossible, but the machines can. So if you look at it, I think we must have got a lot more emails as I was speaking, and we are seeing that every 1 minute it is looking into the algorithm, into the market, and still rejecting all the 100 stocks which I'm playing with. So here 50 buy and 50 sell, and this is the same which we are looking at. I think I'm looking at the number of stocks is 100 here. But the difference is one of it is static and the other one is research. So you can have your own research based stocks, or you can have your static stocks, doesn't matter. I cannot be interfering in how you do your research, but so far, if you have a research based stocks to plot in and keep it ready with the algorithm, so be it. Or if you want to have a static stock, which I did before, uh, just to show you, means everything is static, nothing changes. It picks it up from the same list of stock. On a research base, the stocks are changing because based on your research. So for the last 2 days, I'm doing this, but again, I'll come back to static, again, go back to research to see under what conditions I can do better. So that exercise has to go on, but there is no hard and fast rules. But when you keep optimizing it, sky could be the limit. So I'm averaging to this range in between now here, but my goal here is to keep bring this in between 50 to 90% range. So this is where I have to make sure that I'm getting the configurations more rigid, and at the same time I make profits. But at the same time, if I see that I'm doing not trading for quite some time, then maybe I might have to change the market conditions or the individual stock conditions as time progress. But this is an ongoing process, and this video, I'll keep publishing this type of videos for everybody to see how you can fine tune your algorithm. Of course, during your time when you would be trying this, you have 1 month completely on us, where basically these virtual machines which we are using from Amazon, you will also get a virtual, and you can try that with the configuration of your preference. I will give you this particular worksheet for you to take it as a jump start, and at the same time you can always consult with me in case you want to make any changes, uh, what could be the consequences. So there are a couple of videos which I have done earlier, that if anything you change, it follows the Newton's theory. As I said, everything has got an equal and opposite reaction. So this is one of the example. I have increased the conditions of the market today, I mean for the last 2 days, and I made it from uh, basically I've made it from 0.5% to this is the one, 0.5% to now 1.75%. And what is my trade-off? I'm not trading today. Although the market is positive, it is in the positive direction, but I'm not trading. Why? Because I have raised the bars. So as said, that any changes you make, there'll always be a counter effect, and you have to understand what this counter effect could be. So in this case, as an example, I'm better off not to trade than to lose money the way I lost the previous day here. So if I can be conservative and at the same time the next day I make money and I maintain that average which I told you here, I'm fine. But if I am not able to come close to this, maybe I might have to reconsider either on the market side or on the individual stock side to pick up some trades. So as I say, the investment in this particular with what we are trying to do as a passive income, we are not gambling. We are setting up the parameters so that we can be tight or loose depending on how we want. If you have made enough profit, you can make some adjustments to your algorithm and loosen it bit. But if you have made losses, you have all the flexibility to make it more tighter and rigid so that next day it does not trade unless those conditions satisfy. So I will, as said, that I will continue doing this video, but keep watching. And as you take your trial, you will notice that you might be doing something like this or even better. Of course, it all depends on your configurations and what type of subscription you choose. Mostly the subscriptions are depending on two things: number of stocks and you put on your list. In our case, we have 100 stocks and 60 seconds. You can have 250 stocks with 60 seconds. Means what? You'll be looking into much more opportunity than 100 stocks. So we can talk about that later, but at least it gives you an idea about what to expect. Thank you.